Good morning, ladies and gentlemen. Welcome back. Next panel is Unlocking Ship Finance, dealing with alternative funding models and market realities. That's the theme for the next moments or so. My name is Christian Finnern. I'm a partner at Watson, Farley Williams, and it's my pleasure to again moderate the Ship Finance panel. Fifth time that Capital Link is here in Hamburg, and it's really great to have that content-based part of the Eisbein Week, I would say. Good to see many of you also here listening to us. We have 4 known experts in the ship finance space. Great that you made it today. And to get the conversation started, please could you just very briefly introduce yourself, say who you are, what you do, a bit of background, and if you like, you can start with the first statement to whatever is on your desk at the moment, and then we take it from there. Martijn, give it a start.
Good morning, everybody. Martijn van Tuijl, First Citizens Bank, also known as the American Sparkasse. Remember that? Yeah, I've been in ship finance for a very long time, previously with EVB, and it's always good to be back in Hamburg. And Hamburg is back, which is also good. So there's great deal making here, and we're happy to talk to everybody.
Yeah, good morning, everyone. My name is Maximilian Otto. I head IG Capital, which is the finance advisory arm of IFCO Galbraith. Our focus this year and also last year was mostly around Chinese leasing and Japanese leasing structures, given the fact that Martijn and other banks are so actively marketing themselves. So we believe we can add a lot of value more on the Asian financing part and have seen some very good volume this year.
Good morning all. My name is Iraklis Tsirigotis. I'm the Director of Origination, Neptune Maritime Leasing. I've been in ship finance for 15 years, previously with 2 Dutch banks, and now still ship finance, but through leasing. Regarding what's stable and what keeps us more on alert these days, definitely geopolitical tensions, and I think we're going to discuss about that more today.
Absolutely.
Tobias Becker with Pelagic Partners. We are a fund management business. We run equity funds and private credit funds. It was started by Niels Hartmann and Otto Faber-Mary. Niels's father is being honored later on today for his contributions to shipping in Hamburg. And Otto's father, Mary Aber-Mary, started his business here in Hamburg. And we did, on the credit side, we closed our first deal in a new strategy last week with the Hamburg-based shipowners. So we're very happy to be here today.
Yeah, thank you very much for introducing yourself. And indeed, a good mix of views and standpoints we can listen to. And Iraklis, you highlighted that. But first, you're right, Hamburg is back, which is very good. A lot of interest we also see from outside into the German market, which is very pleasing. And this week hopefully creates more opportunities on that one. But yes, Iraklis, you said that, and we touched on that in our conversation we had before. I think the heading of the panel was alternative funding options and market realities. I think we quite quickly realized that we want to turn the order. We would first look into the market realities because they are definitely much more food for thought and discussion. And of course, geopolitical events influence ship finance very intensively these days. And Martijn, maybe you give it a start. What reactions are you seeing? Is the customer base nervous? People coming to you, new business land on your desk with your setup?
I think the theme, both for our clients and for financiers, is changing trade lanes. So with geopolitical unrest, you see that certain financing, Chinese financing, becomes more difficult for some, which creates opportunities for others. So that is definitely be the theme the last 12 months. For what was always the theme for the last few years is that traditional bank finance found it harder to find the right deals, creating a lot of opportunities for the speakers on the left of me. And so the financing landscape is far more diverse than it was. And for, say, a more traditional lender like us, that is both a threat, because we lose business to these guys, yet it is also an opportunity, because they can be my clients too. If you run a sale and lease back model and you provide higher leverage financing, we're very happy to do a senior piece in that structure. So a far more diverse financing landscape, which I think is very positive for ownership. There's more availability of capital at a better precise point of say risk appetite, leverage, and pricing.
Yeah,
but the big theme is obviously shifting trade lanes. Some financing is discriminated against others, and we all have to find our new way of finding deals.
Yeah, no, that's all fine and good and understood. And maybe Max, I pause with you for a moment, because the Asian theme is definitely something we touch on later. But Iraklis, I think maybe if you reflect on what Martijn said, I think how has your business model changed, increased, decreased? What are the things you are looking at these days?
Luckily enough for us, that was a very nice twist the last few months, because we're a European leasing house, one of the very, very few. So we are not in Asia, we're not in the States, so that works brilliant. Lots of inquiries. I have to say that there is much more discussion still stage for such transactions, and only a portion actually materializes in refinancing or refinancing of Chinese leasing houses or other players. But definitely there is more engagement. I was sitting here last year and the year before saying that diversifying your source of capital probably is the most important, and now we see it even more vividly why this is important. Having said that, one paradox of that situation is that, yes, there is lots of liquidity. Martijn mentioned that, we all know that, strong cash flow, etc. But not for all transactions, meaning that if you still need to raise hundreds of millions for a refinancing or a new project, outside China and Japan, you will struggle a bit. So that's a bit of a paradox. And coming from Greece, there are some very large groups that they have multi-billion balance sheets and very large order book. And when they look around and they go to Greek banks and European banks and American banks as well to raise, I don't know, 400 million, yes, they will get that, but it will take lots of effort and time to do that. And what if you need to do another of such deal shortly after? So there is some limitation, despite all the liquidity, etc., for the upper part of the companies, the larger ones.
Yeah, Tobias, what's your view, taking this into account what Iraklis Martijn said?
Well, just to follow up on that, I think the headlines from last week, it made it seem like trade disruption is over. I think that we're far from it. I think we have a lot more disruption coming. As long as Trump is in the White House, he will continue to give us surprises. And that's at least 3 more years. We'll see how long it becomes. But for shipping, disruption is generally a good thing. But to then succeed, you have to be nimble, you have to be flexible, and you have to find funding partners that are diverse and can find solutions for many different situations. And I think we represent that on this table. And as a ship owner, you have to be, like you said, you have to reach out to different sources of funding that you relied on in the past.
Yeah, Max, you listened to what the speakers said, and I know you have a focus on Asia. You mentioned that already in the introduction. I think what's your view and trying to bring the things a bit together?
Yeah, I think this year really was a shift in terms of how strategic the financing source becomes for the ship owners, because it very much touched or affected the operational trading of the vessels, which I think is very new, and we haven't seen this before. So it's not just pricing anymore, it's not just structure anymore, it is very much where do you trade the vessel and what type of financing is the right source. Now, last week, this was all a bit reversed again. So as Tobias has said, it's going to be changing, and I think the ship owners have understood that diversification is key in terms of funding sources, because it might be different again next week, and you have to be able to tap into all different kinds of funding sources. I think what Iraklis has mentioned is interesting in terms of sizable transaction at very competitive pricing, and obviously that's where the Asian market is super important for global shipping industry. I think Chinese financing now is around 20% of the global ship financing volume. So there's no way this can be replaced. If you look at the order book, China will play a significant role in funding the ships coming over the next couple of years. And quite reversely or different to the banking market, if you come to China with a $400 million project, you probably get much more traction than with a $40 million project. So size is a benefit. Bigger companies are also benefiting of much more aggressive terms. And in general, the pricing has reached I guess a low point again, and I think we said the same here last year, but it keeps on going down. So pricing is well below 150 bips in China now for big companies, and we're talking close to 100% financing structure. So I think that's it is very competitive. The Asian market, it is not relevant or it's not the right source for every project. And I think what we've seen this year, and that's why I think all of us are quite happy with the situation, is that it caused a lot of transactions in general. So refinancings on ships which were trading into the US, and then again new financings on projects where the US was less relevant.
Yeah, thank you for setting the scene for that one. I think we heard disruption is a theme we are all looking at. I think what you described sounds quite positive. So is it a challenging situation for us, for the owners, for the market, or is it really creating more opportunities? Maybe I think it sounds very positive, but I, of course, speak with many people these days who find the situation rather challenging. So it's good funding is available, but is the disruption more a challenge or more an opportunity?
I think it depends who you are. So in general, it's of course it's been a challenge. I think for the ship owning world, because I mean, if you think about the fees that were triggered based on USTR supposedly being implemented a couple of weeks ago and just being delayed by a year now, it's significant. So I would say for the ship owning community, it's been a challenge. For financiers, it was probably for some actually an opportunity that arose out of that, and definitely I would say for people like myself and my colleagues as intermediaries, out of the sudden the cards changed and advice was very much needed. So I think we were more kind of required than perhaps before.
Yeah, and Martijn, you're kind of the provider of debt financing.
What happened and happens, and I think we're still a little bit in the middle of, is that a lot of owners need to hit the pause button, right? So, okay, before we do anything next, there's certain things we need to repair right away. That's a scramble, and now we have to think through. So, in terms of our business, as over the summer, was very slow, because you see a lot of owners saying, "Hey, okay, let me see. Am I going to say goodbye to my trusted Chinese financiers?" I mean, there's a lot of hesitation doing that, just because there's a different, say, regime in the US, am I going to say goodbye to that source of funds that has always been good to me? So there's one. People hit the pass button. Now, there's only 1 year of a deal. This I predict. People will now have to take a very long-term view, because if you're at the same point a year from now, then you're an idiot, because you had 1 year to solve it all. So I think everybody is not, okay, now we can relax for a year and, we'll see next year. No, what has been set in motion is now going to be executed. So owners will have to form a long-term view. How am I going to do it? What is my fleet? How am I going to protect myself against, this maybe becoming reality a year from now? So I think we'll still see a lot of rejigging and optimizing of that, which will then lead to transactions. But for now, it's been slow.
And
Just to add one thing, though,
of course, I would come
by
to you
coincidence, we
yeah.
have midterm elections, and the deal is going to expire just before that.
Yeah,
by
so
coincidence.
midterm elections
So
next
you can
year.
imagine the volatility in the third quarter next year.
Yeah.
Whereby Trump probably would like to be the big guy, saying, we have seen that already for the last few months. So
Okay,
I can
fair.
clearly see that coming.
Okay. And you coming from the US, so not personally, but of course, business-wise, FCB, are you seeing more traction these days? Is it kind of what happens out of the geopolitical situation for you, specifically at FCB?
As a financial institution, you'll have to be able to operate under any type of government. So the trick always is be Switzerland, right? so have as little of a political view as possible. That's not what we're here for. We're here to serve clients. Obviously, when USTR was first announced, we have to scramble explaining to the credit committee what that means, right? Because, First Citizens Bank is a $250 billion bank with a little bit of shipping. So they're like, okay, so what's the consequence? So again, it goes to, there's disruption, which is great, but at first you need to repair stuff. So we got through that phase, and now they're like, okay, we understand what the consequences are. Having a Chinese-built vessel in your fleet, that's okay, we understand now. So maybe a bit specific for being a US lender, that was a little bit of a readjustment. I'm not wishing for the same again. So, we had a disruption, we got a blood flowing again, it's all fine. I don't need more of that. Nobody does. So, but
True.
But to Iraklis' point, there's midterms next year, and we will be more sable redding, and hopefully we have a pause for a year. But to your point, Tobias, there will be more change.
Just from an American perspective, shipping will never be on top of the agenda for most politicians in the US. In most other countries, you will have the ability to influence maritime policy. In Washington, they just don't care. The benefit of pushing out USTR rules this last week was just an effect of change in trade policy that had an effect on shipping. Shipping policy just will never be number one.
But partly we'll agree. Because of the IMO decision that suddenly over the weekend they had to fly how many Americans to London to try to convince the others not to actually proceed with a carbon tax.
Sure, but that's an environmental issue, not a shipping issue. So there again, it becomes a secondary issue of a larger agenda. So that's the...
Partly we'll agree. I think it was a tax, and basically Trump doesn't want to have another tax on the table.
And
by the way, again, the decision was postponed just before midterm for VSS on the IMO. So everything aligns.
Yeah, of course, there's a structure behind
around
it.
next year.
I guess so. Yeah. And look, moving a bit away, but still keeping the look into market realities. I think obviously the last couple of years, ESG was the key topic. Green shipping was the topic that has a huge impact on the financing environment, obviously. And I do not want to neglect that topic, but maybe Iraklis, how are you looking at these themes? Is it still now the new normal? Everyone knows what to do, or is it still driving?
I think in simple terms, it has been deprioritized to just a normal level. And the normal level is that it's one of areas that any shipping company needs to focus together with hundreds of other areas it needs to focus in order to be a prudent and well-run company. I think finally we're down to normal levels rather than ESG being the driving factor for new vessels, new financing arrangements, etc. So that's the short answer.
Yeah. Tobias, anything from your end on this element of ship finance?
Well, from a political perspective, clearly it's been deprioritized. I think from a functional reality, so energy transition is happening. It's happening for economic reasons. It's happening for push from the electorate. But I think so that's not going to stop, but definitely slow down, as you've said.
And Max, also bring you in again, ESG green shipping, also maybe with a view on the Asian market?
I think, I mean, a bit more macro picture, actually, if you look into China, they're probably the driving force when it comes to renewable energy now and taking quite the opposite stance of the US. So overall, it's a topic that they are very much, focused on. And when it comes to shipping projects, I think they're quite simple. I think ESG is not the main matrix they look at. They look at the competitiveness of the vessels. So if for that segment, dual-fuel LNG is the right solution, then they're very happy to finance that. If it's dual-fuel ammonia, they're probably also very happy to finance that. So I think they are much more neutral there compared to perhaps a few European lenders who have taken an active view on which propulsion system is supposedly correct to finance and not correct to finance in that sense. And I think we see now actually with some lenders who had, for example, said we don't prefer to finance dual-fuel LNG vessels, we want to finance dual-fuel methanol vessels, reversing this now after the IMO delay and saying, okay, dual-fuel LNG seems to be a good enough solution to continue writing business. So, from an Asian perspective, I would say it's less of a criteria.
Just on energy transition, I think the ultimate decisions here are being taken by the actual end users of the vessels, or the people who need the transportation of the cargo. They're the ones who can commit long term to higher day rates, because new technology will require higher day rates. And it's not going to be driven by us, it's not going to be driven by the ship owners themselves. It has to be the final end user who pays the bill.
No, absolutely fair point. And Martijn, to what extent would you say, looking broader from a lender's perspective, is the green finance element still a new trend, or is it?
No, the catalyst period is over. That thing is that train is driving, and here we have the next topic to be hysterical about, so we can park this. But it was always the case that green, fuel efficiency is just good for your wallet. So that is the most natural way of being green. I mean, improvement in propulsion, smarter about fuel. You don't have to add a lot more. If the economic dollars and cents is behind it, that will drive it. And I think that is now people start investing. There's a whole industry that sees opportunity. There's enormous brain power that looks for. We had the 2 panels this morning that look for solutions on a smart scale. Blah blah blah. So that thing is coming.
Yes.
Have we ever prioritized it? We're a bank. Yeah. We're not an early adopter. We're sort of, we're in the corner looking. We'll do the 10-year-old.
You're following the market.
Okay, where's this going? So it's a bit of maybe a lame, lazy position to be in, but that's reality.
Yeah,
so
the projects will come, I guess.
The project.
Yeah. And anyone else on is there anything sort of in terms of technology, you touched on it briefly, anything you see specifically in projects, customers coming to you and say, okay, that's really modern, that's really high value technology, anything really surprising new, anything you want to share with us?
Yeah, well, as an example, I can say that we're approached to finance one of the really state-of-the-art tanker vessels. It had all features that you can imagine. The add-on cost was about 20 million compared to conventional. We couldn't really be competitive on that because you had a break-even which was 20%, if not more, higher, without having any comfort whether this will get paid. So that's the difficulty.
Yeah.
I think that's actually a good comparison, if I may, because we financed actually 2 LR2 tankers this year with DF LNG with wind propulsion, and there the Chinese actually were financing completely all the extras. So just to show a comparison of how they view it, and I think that shows
Chinese build?
No, Korean. So it's that shows, I think, that also the aggressiveness and the willingness to really look into detail from the Chinese market at the moment, because they are so keen to get projects.
Yeah, very interesting. And Tobias, is there any project you can think of where you say, look, that's technology?
I financed the dual fuel VLCCs. They were $25 million each, extra cost. The only reason that project was done is because the end user was willing to commit to a 7-year contract.
Yeah.
A 7-year contract that compensated to basically write that $25 million excess cost off in that 7-year period. So that after 7 years, you're basically where you would have been if you had a conventional VL during the same period.
I'm just happy we're not at a German car conference.
We would be interested what you hear from you then.
No, but it goes to the Chinese point. Right?
Absolutely.
So they're far ahead. They see a winning strategy in actually doing that.
Yeah, absolutely.
And it's massive.
Yeah, market realities. I think, is there anything you would like to recommend to the audience what they should do dealing with the current situation, with the disruption, with the challenges and opportunities?
I would say keep all options open. This world and the economy will keep on changing constantly. Doesn't just go for Chinese leasing houses. It goes for everywhere else in the world. And have exposure to every part of the funding market, because you don't know which way the winds are going to turn.
Thank you very much. That's wise words. Anyone?
Yeah, not much to add. I think diversification is something we've said before, so it's crucial, definitely.
And turning now to alternative funding options, to the extent there are new alternative funding options. But first, I would keep with leasing for a moment. Iraklis, of course, you just do leasing transactions. Firstly, I was thinking, do you have the impression that people got used to leasing structures thanks to Chinese leasing? So because it is something we saw discussions on, I'm not the legal owner. Is your impression that people got used to it as also part of the new normal in finance landscape?
Sure. I'm looking a bit of you and a bit of Nicolas down there. I'm not sure who is responsible for the title of the session, because it's not alternative. Alternative, when it accounts for more than 50% already of the funding structure, which is alternative also.
No, and I was trying to say it's not an alternative. You are an alternative. I'm definitely not. It's definitely part of, I would say, what
20 years ago, European banks used to account for 78% of the pie, ship finance pie. Now that's down to a third.
Yeah. No, and what I'm trying to get it is leasing. I would answer the question that people got used to leasing. Many people do that. That's true. So and maybe to some sort of thanks to Chinese leasing, because it was so massive, and maybe do you see customers coming to you saying, look, I understand leasing. What's the difference you are doing? Is that kind of helping you as well?
The last couple of years, we are not really discussing about that because it's really mainstream. I think there is so much experience out there for all parties, how leasing works, and basically that's very much in essence similar to a loan.
Yeah.
Just a different financing arrangement overall, but the securities are the same pretty much. The structure, essentially it's the same thing. Conceptually, it was difficult for a traditional owner to understand, okay, but you have title of the vessel, while I don't have, so what do I have? All these things, but I think we have already crossed that point, and now the whole discussion is more about the commercial terms, and less about, okay, tell me this about the structure, etc.
Yeah.
I think, Christian, on that point, Germany is being very peculiar because of our tonnage tax system. So I think if you look into international markets from our point of view, all the tonnage tax systems allow for leasing structures to fully apply with the local tonnage tax. Whereas in Germany, that's not so straightforward. Of course, there are solutions to that. But that is a reason why in the German market, I think it was less adopted compared to the Greek market, for example, or the Norwegian market. So I think we need some work on our tonnage tax regime on that, because it is a pure financing structure and has nothing to do with the operations of the vessels. So that is a bit of a negative factor of being based in Germany, because you can't access the same funding as your competition in Greece, because if you don't have a European SPV as the lessor, you will not be able to go into the German tonnage tax system.
Yeah, I probably, having seen that also for the last couple of years, it's probably not the tonnage tax as such, but it's probably the administration around it, so being the BSR, the Federal Maritime Authority. And I remember 5-6 years ago when the first ships were delivered, I think it was a very, very intense discussion to explain them why this should work and why an Irish SPV should be allowed to register the ship in the German ship registry. So I think it's not long ago that they had to accept that. Martijn, on of course funding options. I think you said yourself you would be happy to fund the leasing structure. Yeah. Is it something you do more often now, or is it?
So the way we see it, it's a very effective and efficient way to basically do a junior-senior structure. In the old days, that was done a lot, but it was cumbersome because it needed a intercreditor agreement. There was a lot, and now you effectively have the same without a whole discussion on an intercreditor agreement. So we like it a lot. It creates another group of clientele for us. So yeah, we're fans of it. Absolutely. Yeah. I think that, and it's a great. There's more tools in a toolbox for an owner. Better.
Yeah.
More efficient market, and listen, in aviation industry has been there for what, 40 years?
Yes, that's true.
So shipping was very late to catch on. Effectively. No,
that's true. Yeah.
Nothing bad to say about it.
Yeah. And in terms of players in the market, I mean, of course, it's a question of what products are available, but also who is available. I think, Tobias, are you seeing new entrants? Are you seeing old players coming back?
No, you are seeing some new entrants. I think at the end of the day, though, when we lose deals, we rarely lose deals to competitors. It's mostly that the deal we're working on doesn't happen for various reasons. I still don't think there are enough players in our market, because the demand will continue to grow, and it should be substantially larger than the current supply.
Iraklis, your view on that?
I fully agree with the last point about capacity. Take our example. We started 4.5 years ago. We are approaching 1 billion mark. That's 1 billion of additional capacity in the market. You know, if there was ample capacity, we would have grown that much. So that's a sign on its own about the fact that, and for you the same, and for Martijn and for others, that the fact there is growing demand. And yes, now we are in a kind of euphoric times, cash flows are strong, there have been deleveraging, etc. But at the same time, we haven't really renewed the fleet, the world fleet, with a few exceptions, maybe for the larger container ships, with VLGCs, etc. But if you have to renew the dry bulk fleet, for example, where the average age is, I think, approaching 21, 22 years, I don't know what's the latest figure, you will need hundreds of billions, and clearly we don't have that capacity out there. When that time comes, it will become more apparent.
Just to follow up on that as well, I think most bank loans, no offense, Martijn, and leasing, Chinese leasing loans, they're very similar, right? They're not that different. But I think a lot of the leasing providers have their specialty, and everything we do is customized or specialized, either because that's what we do or because that's what the clients need. So it's not as uniform as the standard products that are out there.
Max, also maybe what you see in Asia, new entrants, old players coming back? Is there anything you
Yeah,
want to share with us?
I mean, again, on the Chinese market, you have now probably 30 leasing houses that do ship financing. Out of these 30, I would say 22, 23 are relevant for overseas owners. So it's a very deep market in itself, and these leasing houses are usually backed by massive banks, right? So there is a lot of capacity there, but as we said before, it's not for every project, it's not for every client to be able to actually tap into that market, because it's mostly recourse projects or with long-term charter coverage. But there are a lot of new players coming, and there's a lot of incentive from the government to keep pushing lease financing for the shipping industry.
If we set aside the bank leasing, right? So big tickets on big balance sheets, that's the bank leasing model. If you go to the private equity leasing model, I think the biggest impediment for that industry to grow is that shipping is really the world champion in mispricing risk. So there's a lot of equity that would do it if the pricing were just better. So these guys are fantastic that they found the right equity source that will actually live with the returns they're going to bring. Because in my opinion, that is the biggest holdback on that industry growing. Finding the equity that is willing to live with mispricing in shipping.
I think the equity point is something I had also on the list, and as you touch it, I think
I give you the segue.
Yeah, that's good. That's good. You made it. And Tobias, equity side, it's interesting, isn't it? I hear from so many clients there is so much equity in the market, and the pricing is obviously nothing a lawyer should judge on. But maybe what are you seeing in terms of equity? Where's the equity coming from? Where are the keen people to inject the equity in projects?
I think true common equity, the challenge with shipping is true common equity. When people have come from outside of the industry, they've generally lost money, and generally lost a lot of money. I think people who've been successful in shipping are the ones that have been in the market for a long time and have managed that risk successfully. Because I think you're right, if you just look at the metrics of a shipping deal compared to other industries, it's generally mispriced. So I think, yes, there's a lot of equity in the market. That doesn't mean that there's a lot of equity for shipping per se.
Anything you want to add on?
With regards to equity, I can say about whether there's interest in private credit, more like our structure, and definitely there's a growing appetite. Contrary to some of the latest developments in the United States, whereby there is a bit of turbulence in the private credit markets. Look at the recent filings for insolvency, etc. But for shipping, because it's a different animal, as Martijn said, still there is a growing need, especially from institutional players and some sovereign funds as well. Now, whether that capital is the right one for further expansion of our business, that's a different question, because as Martijn very well said, you need to find the right equity capital for that business. Perpetual nature, long-term view, modest risk profile overall, if you structure it properly, and the appropriate yield.
Strong stomach.
Always good, always good.
And on that, I think the track record of specialized shipping investment funds is quite strong. The track record of non-specialized investment fund is quite poor. So you got to differentiate.
Yeah. Your thought on equity?
I mean, it's correct that there is a lot of equity on balance sheets of ship owners, but of course that's very smart equity and pricing the risk correctly. So struggling to deploy at the moment. So I think there's no need really for external equity to come in fresh into the industry. I think a source that is very interesting also in terms of new opening up very much this year, I like to highlight, is the Norwegian bond market, which has not been used that much here in the German market. So if I may advertise my good friend Niklas Petranowski sitting in the back here, he can help on that. But I think that's a very interesting capital source because you can use it as equity. It's priced probably much lower than most of the equity investors would ask you for. So So I think that's an interesting source and something for the German market, I think, to study a bit more and see how they can access that.
Last chance we have, 2 sentences on what would your perfect product look like if you leave Hamburg this week. So maybe we can open the discussion here.
A perfect project. Well, a perfect project is something that has a long-term contract, and the end user has a funding need that can't be easily funded in a bank or in the broader market, where you can tailor specifically what the end user needs to have achieved, whether that's pre- and post-delivery funding for a long-term institutional gain.
Iraklis, your perfect project?
Difficult to say. It really needs to fit all aspects. Let me give you one example. You just mentioned about the bond market. Yes, very competitive, but I think the companies need to be extremely mindful the fact that you are matching most of the times a non-amortizing debt instrument with a heavily depreciating asset. Mm-hmm. That can be a recipe for disaster, as I've seen before. So yes, lucrative, attractive. So for us, if we have to engage with a company that had lots of bond activity, and there are only a handful of such companies nowadays, we will be particularly interested to see what's the debt profile, how does that look, not just today, but over the next few years, and whether we are going to end up in a situation that actually is far from ideal. So that doesn't directly answer your question, but it really varies, I would say. It just needs to make lots of sense, I guess.
Max, 2 sentences.
Perfect project, that was.
Yeah.
I would say in new building with long-term charter coverage.
Martijn, your chance. All the customers are here.
Yeah, I mean, I have to come up with something smart, right? No, it is. In honesty, it's a project where you make a friend, where you can show that you're a little different or a little more flexible, be it with an owner or be it with a partner in the sale-leaseback, or be it together with another bank. I think that it's an extremely small industry. And people that are in it have been in it for decades. So we all know each other, and life's too short. We can do something together. Those are actually the best projects. Yes.
That sounds really good. Thank you very much for listening, for all your contributions. Very much appreciated. I hope that is start for continuation.
Can we have Bocom back here next year?
The Chinese elements, of course, continue. Worth to consider. So thank you very much for listening. Thank you very much for your contribution. And sorry for the slide over on Nicola, but that was Unlocking Ship Finance. Thank you very much.